Hi everyone, and welcome and thank you for tuning in to another monthly economic update for the month of September in 2024, brought to you by the Economic Intelligence Unit through our platform Economy.lk. To start things off, what we have here on this particular slide is the growth projection growth for Q2 of 2024, where the Sri Lankan economy grew by about 4.7% and with a 5% growth in the first half of 2024. And where is this particular growth coming from? It's mainly the industrial sector. The industrial sector grew by about 11.4%, services sector grew by 2.6%, and agriculture sector grew by about 1.8%. So mainly the main sector that's contributing to the economic growth is the industrial sector. Staying on growth, on this particular slide, what you see is the central bank's outlook for economic growth. Recently, although it says 3.3% growth projection for 2024, the governor of the central bank very recently said that they are quite optimistic that the Sri Lankan economy would grow more than 4%. As you saw in the previous slide, the first half, the Sri Lankan economy grew about 5%. Of course, we are anticipating that the second half would not be growing at the same amount, because the reason being the second half of 2023, we saw the Sri Lankan economy starting to grow positively. So what we see is a base effect. So the second half of 2024, we might see lower growth compared to the first half. Moving forward, what we have here is the PMI Index. And as you can see here on this particular slide, PMI for manufacturing at 55.5, PMI services at 65.2, and PMI construction at 62.9. What does this mean? PMI is basically an index, and it's an interview done by the central bank with various stakeholders in these particular sectors. And if your index indicates a number above 50, that implies that the stakeholders are envisioning a growth potential for that particular sector for the next 3 months. And as you move forward, what you can see on this particular slide here is the business sentiment index, and you see a gradual improvement in the business sentiment index. And as projected for Q3, it's at 107 compared to 102 in Q2 and 99 in Q1. And moving on to inflation, what you see here is 0.5% CCPI in August and 1.1% NCPI in August, mainly driven by the utility bills coming down, that is your electricity bill, water bill, and also your energy costs coming down, and food inflation also slowly coming down. And policy rates were maintained by the central bank, as you can see here in the slide here. The SDFR is at 8.25%, SLFR at 9.25%. The central bank, in the recent monetary policy review, they mentioned that they are trying to move into a single policy rate, and we have written an article on Economy.lk, which you can see in the link down below. And with interest rates coming down, what you see here on this particular slide is the credit to the private sector is growing. So it grew by 6.9% for the month of July in 2024. Moving away from the monetary sector to the external sector, merchandise exports and services exports have improved. And as you can see here on this particular slide, January to July 2024, merchandise exports were at $7.2 billion as opposed to $6.8 billion, and services were at $4 billion as opposed to $2.9 billion. And what were driving these exports of services? Mainly it's tourist earnings, sea transport, IT, BPO, and air transport. Moving into the tourism sector specifically, what we see is for the year 2024, tourism earnings already have surpassed 2023 tourism earnings, which is $2 billion. So from Jan to August 2024, tourism earnings were at $2.1 billion. And as you can see here on this slide, tourist arrivals were at 1.3 million, and they are expecting to reach the target of 2.3 million for the year 2024, which was the number of tourists that came in the 2018 year, which is the benchmark year that we always compare it against. In terms of foreign exchange and our currency, as you can see here on this particular slide, it has stabilized. The rupee has stabilized with the USD at around 300. So the rupee has appreciated about 6.2% so far for the year 2024. And if you move on to the fiscal sector, what you see here is to your left-hand side on this particular graph, you have your revenue, expenditure, and overall budget. Revenue has improved by 42%. Your expenditure has come down by about 4%, and your overall budget balance has improved by 52%. This is January to July 2024 as opposed to January to July 2023. And to your right-hand side on this particular graph, what you see is the tax revenue. Tax revenue has improved by 43%. And on the global front, we saw that the Federal Reserve cut its interest rates by about 50 basis points. And we also see in the Middle East, there is a lot of uncertainty. There is a lot of that Israel is with Israel's war on Lebanon, as opposed to Hamas and Hezbollah. There's a lot of uncertainty growing in the particular region. We are yet to see how that would have an impact on crude oil prices, although oil price per barrel is low at this particular point. So interesting developments going forward. So thank you very much for tuning in, and we hope to see you in our next monthly economic update. Thank you very much.